Hello, everyone. Welcome to another episode of AI Amigos Show. My name is Marina, and I'm very happy to be here with my two good friends, James and Chanchao. Hi, guys. Thanks for being
Hello.
here.
Hey,
So it's very nice to have you guys. And as we mentioned last week, we have a surprise for today. And it's to mention that we have a sponsor for our show. So Tequila AI will sponsor AI Amigos Show. And as you can see here on the website, maybe Shanchao can show you a little bit more. It's a company that is dedicated to AI services.
that sounds interesting. I think I want their services.
That's our first sponsors. That's very nice. And yeah, I think they currently have few in the pipeline, but the on the market right now is the synthetic data and products. When we're talking to them, yeah, they have a few in the pipeline at the moment. It's a very interesting company. Thanks for sponsoring us as well.
Yeah.
That's very nice. That's very nice. Actually, for us, it was a really nice surprise. And then, as we discuss at certain point about the synthetic data, and maybe probably when we talk a little bit in our topic today about this, I would say that many companies really need it at the moment, especially to comply with the GDPR and the EU AI Act. So now you know the website tequila-ai.com, and then, well, you can contact them in case that you want to implement AI in your company. So, having said that, I think we can get started with the topic of today. And guys, I think in this one, Shanks will be the one who will bring a lot of light in the scene because we are
Who?
talking about AI and the bots for trading. I know that a lot of people are looking into the possibility to trade, to invest some money, to keep the value of the money, like to the trading, and of course, AI is already in the scope. So maybe I will just hit the ball towards James, and James, you can tell us a little bit about what is going on in the market.
Well, I mean, algorithmic trading has been around for a long time. Obviously, now we're adding the element of AI to it. But I mean, there was back in 2010, I believe, or 11, there was the flash crash where,
Mm.
these high frequency traders, as they're called, where they trade in milliseconds and they
Mhm.
want to be as close to the exchange as possible so that their trades can execute before your trades. So uh, that is obviously beyond the scope or realm of what a human trader can do, right? And so, but those are all deterministic trading algorithms, where now we're using AIs for probabilistic trading algorithms and using AI and bringing that into trading. So I know my journey initially started in regards to AI was in trading, because that's my background, finance and looking at. And there's a lot of different approaches that you can take. So you can look at portfolio management, you can look at price prediction. I think, which is one of the most important that most people don't look at, is risk management. And just what you feed into the algorithm, into the AI, and then what are the outputs. And there's different types of algorithms that you can use, as whether it be, I know a lot of people are using, like generative AI, but you can use like LSTM models. I've created LSTM, so you can use any kind of classification, like even like a CNN, and you can still use an LSTM on that. And you can also use reinforcement learning or any kind of statistic stuff like Marina, like Arima or Sarima. Those as well
Of
are
course.
quite good. And then you can, like I said, you can use generative AI. So there's a lot of use of different ways, and at the end of the day, it's to predict predict the price. What is the
But
price?
so then something that really gets my attention, because as we know, the models, for example, the forecasting models, they are there for so long. LSTM is there for so long as well. But there is a kind of explosion now. I believe that with the rise of AI and with all the people that really want to do trading and they don't know where to get started, they try to automate it. But here comes something that comes to my mind, because you know that I worked as a business analyst for a while, and then when I was doing my calculations and the forecasting, still you need to have a kind of sense on what is happening in the market, right? So then someone said recently, when you analyze the market size and the rates and the growth and everything, so it's more an art rather than maths only, or rather than only stats.
It's as much as an art as it is a science. Yes.
Yeah, exactly. And then I was thinking, like, this is actually true. So then how can we really explain or justify this explosion of AI in the financial sector, at least in trading?
Well, I mean, a lot of the stuff there is opportunity for automation. For example, if we look at, because I was telling about price prediction, but you can easily do like portfolio management, risk analysis. So where there's a task, so you say, I want to invest in the stock market. Well, okay, what is then do a questionnaire, and then it classifies you into a certain type of investor. And then based on that, it finds the appropriate assets to trade to match your risk profile and your persona. But I mean, I see a lot of people that do, like, software developers particularly, and math people that want to get into trading, and they want to just go, and it's kind of approaching it from the one end, and the one end is the algorithm side, and just saying, oh, I'm going to write this algorithm and it's going to make me all this money. And it was like, well, if it was that easy, everybody would be doing it.
or at least the financial advisors, like as you would actually implement it as well and make a lot of money, and maybe just working twice a year and that's it. But here also, something that really hits me is this sense of volatility, that we can see in the markets. And I really believe that still the machine cannot really get it. Not entirely. You can calculate, you can see the standard deviation, you can calculate the variance and everything. But again, so not all the markets work on the same pace. And I believe that there are some gaps in there, as well as some advantage and disadvantage. I mean, like in everything that we implement with AI. But I think that the machine is still missing this.
No, well, I mean, at the end of the day, it's the same thing with traders. And what I mean by that is that you do have to have what are the inputs, right? And what you have as inputs, so you can look at technical analysis, which is looking at charts and graphs. You can look at macroeconomics. You can look at the fundamentals of the company. What is their profits and things like that, or and really all of that stuff. You have to feed that into the model. But then it's like, well, what's the weighting? What's more important? And there's a saying in the market, it doesn't matter until it does. So there could be something there that obvious, bad, and nobody cares until they do. So how are you then going to find that? So there's a sentiment analysis aspect of it. It's not just a numerical aspect of it.
No, totally. And as well, when you mentioned this about the sentiment analysis, what comes to my head is that, is it unfair to actually use AI to do trading? So do you think that the financial advisors would actually lose their job if
Yeah,
more
well,
people
that's
can
why I say
automate?
unfair to whom? Is it unfair to the customers? Is it unfair to the financial advisors? Is it unfair to the market? Who's it unfair to? That's that's a very
Well,
general
so
question.
then there is a social impact, right? I think I never seen a lot of people, or this many people, as now trying to do trading, and they try to automate, to say, okay, I
Yeah.
want to invest again, and maybe with the rates that they get from some investment one month, I will try again, and so on. So then it seems that there are a lot of people ready to take the risk.
Well,
Um,
there's a lot of promises there, and what comes to mind is in the 1840s in the United States, 1849 particularly, there was a gold rush. Everyone went to
um,
go and get their gold, and let's say for those days it went viral, right? And everybody went over there. But then the question is, who made money? Was it the gold diggers, or was it the people selling the picks and the axes and the shovels and the supplies? And it was really the people selling the supplies. And so you kind of think about, like, I see a lot of there's stuff going around saying, buy our trading algorithm, learn how to trade with our algorithm and using AI. And there's a lot of, it seems like a lot of hope, a lot of it's going to do well. And I don't know. I mean, Jin Shao, have you had any experience with AI trading at all? Or,
I was about to ask you, about China because you were recently there, and I wanted to ask you how people feel about the trading, if they are trading as much as here in Europe. At least in Germany, it's like crazy.
I was holiday there, so I didn't ask them.
What? Why not, Jin Shao?
But stock wise, yes, people like to trade stock more than here. It's the common thing. My mom used to trade until she was 60, I think, and from that time she doesn't think trading is when you get older you don't want a risky asset, right? Trading is really risky. So she went into other stuff, buying some financial products for 6, 7, 8% of the a year. But yeah, everybody like to trade, but I don't think a lot of people are professionally trading, and so the entrance is really easy, a lot easier than here. Yeah, I don't think the regulation is that tight as well. So people, if you get money, that's the money in the pocket. There's no
No capital gains tax.
Nobody's doing that.
Like in Latin America, it's very similar. Not many people are ready to take the risk. I think as well. Well, I can't talk about Argentina, right? So then, the history showed even that the state broke. So then it was not like, okay, maybe just one bank or something. It was literally like the full state. So then people don't really trust to leave the money in the banks, but we can see with the young generations that they really are ready to to invest, to take the risk. But of course they don't have like a lot of money to say, okay, well, I have this much spread and I can do it.
But I mean, that's a problem as well. And in regards to, like, you have companies like Robinhood in the US they call it democratizing trading, which I hate that term because it's just used for everything now. Democratize, that is.
Yes,
so meaning that made trading available for everybody. But what they did is they gamified the system. And if you look at the amount of people that went into, particularly American young men that went in there and lost all their money on these hopes and promises that they were going to make lots and lots of money. I mean, we had meme stocks, like GameStop and things like that, that went viral on Reddit, and people went in trading. And there's even algorithms. I mean, I've looked at some trading algorithms and using AI that detect. There's one particularly that Congress people and senators in the U.S. trade. So insider trade.
Way.
Yeah,
I was following. Yeah.
So they're
Nancy Pelosi, is that her name? Yeah,
she's the best. She's Nancy Pelosi. She makes so much money.
She was 200% or something. Like most of Congress was 50% plus, but just 1 year.
Yeah, so, and that's all insider trading because they know what's happening in the background, whether it be regulations or problems within a certain company or industry. And that's the thing, is that as you and I to trade, it's illegal. I mean, insider trading is illegal, but they trade, and I don't know if they have some kind of exemption or what. But to go back in there and say, okay, well, so now someone says, okay, Nancy Pelosi's made all these trades, so we're going to copy all her trades, and I've written an algorithm that will then find her trades, and then you can copy and do exactly the trades. But the problem is that those trades are disclosed 60 to 90 days after the trades have been made. So therefore it's too late, by the time you get into it, there's no more money. The money that was going to be made has been made.
Yeah. You don't know it's the long-term or short-term goals.
But this is the thing. So then you don't feel that it is a kind of unfair with the market, especially when we are talking to the politicians that are actually trading. So then they probably have some information, even though I know that there are some restrictions, right? Or maybe exceptions, as you mentioned. But is it not unfair for the rest of the traders?
It is against the law for you to have insider trading. It is against the law. Now,
no, that I know, but if they are trading there, so then.
But if you could do something with AI that would be able to find out something that a company doesn't want to tell you, those are things you could do. So, for example, one hedge fund was getting satellite images of a store called JCPenney's parking lot, and they were looking at, based on the number of cars in the parking lot, they could predict what their sales or revenues were going to be based on the number of cars. Now, you could always argue, were they going to the store or were they going where? But that was one interesting way where they went and found information, and that's where I could see AI could be really good and useful, is to find information, to find out information on a company before everyone else knows.
Mm-hmm, mm-hmm.
But I think the AI trading has been around for a long time.
Oh, yeah. Well, yeah. Well,
The
the
machine
the
learning
algo trading.
algorithm, yeah, all that, right? So what recently we see is slightly different. Is people using Gen AI. Just some people just putting, oh, this is the price action. Where should I buy? Where should I do? Or like me, I like to use it for research. I grab all the kind of report from this particular company I interested in, and then put it in, and then put the price action, all the adjacent data, and I ask what's the best entry point. Is it overvalued or undervalued, and all those questions. But like at the end, I put in the kind of cost, right? Where do I buy? Do I wait for it or not? But that raised the question, kind of like the ethics of the AI trading, particularly people using just ChatGPT and put the data in, and ChatGPT says, "Okay, you should buy 9," and
Oh,
then $9.
super
The next thing
risky.
you know is $3. So
Yeah.
that's the kind of question.
Well, I mean, because it's, we've talked about before where people believe AI, like particularly like parents with their kids, they believe AI over their doctors.
Yeah.
And here, where you go, okay, so my like I said, I've been trading a long time, as Marina said there. So you're saying, okay, ChatGPT tells you to buy. I'm going, but what is it looking at? Tell me what's happening that I understand, that then we can evaluate and go, well, that was completely wrong, or that was correct, or find a new way of trading. And I think that's the real problem.
But I think that ChatGPT or any of these generative AI that are very generic, let's call it, like Gemini, for example, or Grok, I don't really think that they have the capacity to give you real data or to make, like a proper assessment. But there are tools that are specifically for trading. I'm not talking about ChatGPT. Like, I mean, like really trading,
Yeah, you get like a Bloomberg.
automation for trading. And those are actually using real data, and they can use like a more accurate assessment.
Do you know how much money that costs? I mean, like if you look like at a Bloomberg terminal, I mean that runs between $2,000 to $5,000 a month. Now, obviously, you can find data sources that are much cheaper. You could go to like Yahoo Finance, and you can get historical data, end of day data. But if you wanted intraday data, if you wanted tick data, I mean, that's what I'm saying. The amount of things that you're going to look at, what is that you're going to build your model on, and what are the inputs going to be, and is that going to give you a good output? And that's almost like trying to convert turn things into gold, and that's the elixir, if you will, the difficult aspect of it.
Well, but here comes again, like we were talking about whether it is fair or not. So then, do you think that it would be ethic maybe for a financial advisor to charge people and at the same time using one of these automation tools?
No. And the reason I'll tell you why I don't think it's unethical, because they're responsible over the advice that they give. So if they give you wrong advice, then you can sue.
Okay.
Right. So if you go and I say, Marina,
I don't know, can you? Because like
absolutely.
they can always tell you like, okay, this is a risk, and you just
of course, no, but of course, but that's it. But that's it. You could, there is a legal framework around that, where if I go to ChatGPT and I ask it, or whoever it may be, ChatGPT 5.0, which I heard is crap, or Grok, or whoever it is, DeepSeek, and you ask them and they come back, who are you going to go and sue? Or go against? I mean, what I mean by that is that, like, even myself, where I have a trading algorithm where I have done this before, where I do, charge client, but at the end of the day, I make the final decision, because then you have to ask the question: if it goes wrong, then who's responsible? If AI tells you to buy, like Jinshell said, buy at 9 and it goes to 3, who's responsible?
Well, yes,
Dun,
I don't know.
dun,
Like I'm.
If they
That's
can
fine.
find out, if they can find out, your customer can find out. If it
dun.
doesn't find out, maybe just wrong decision from the
Maybe they
financial
cannot
advisor.
really find out, but it's it's a problem in there.
I
Um,
I
I
use it.
So as every kind of industry, right? The
Yeah.
doctor, if they're using Gen AI and the kind of they're held accountable, right? They're the authority figure to
Yeah.
say in those.
They're the ones that have the knowledge.
Yeah,
They know. They're
yeah,
the expert as such.
yeah.
Yeah, well, in that sense, you know, I totally agree, and this is something that we discussed a couple of times with James when we were talking about the trading, the financial advisory. So the thing is, you know, what happens? Something goes wrong, you know, like, and you are responsible for that. I know that maybe you cannot be responsible if something like collapse, like the COVID. Okay, well, this I think it
No,
broke all
I,
the.
you can't think of it that way in the financial. What I'm saying is, so if you fill out a questionnaire, for example, Marina, right? And I
Mhm.
go, okay, based on the questionnaire and the answers that you've completed, this is the risk profile of a person that you want to be. So let's say, for example, you become you're a middle of the road, which that means 50% stocks, 50% bonds. And then if I use an AI to then give me an allocation based on your risk profile, and then I review it and go, this is correct, this is no, this is right, this is, and then I give this to you. I mean, at the end of the day, I've done nothing wrong. And to me, the way I see the AI is I use it. Now, I don't use ChatGPT. I have my own reinforcement learning models that I use, and for that for me is it's like I've hired a quantitative analyst, and that
Mhm.
quant has gone and done all the work for me, done all the research. Did you check this? Did you check that? They checked everything that I've asked it to check. It has checked because that's what I've given it to check. So I ask it to check market volatility. I ask it to look at the historical prices. I look at overall markets, the turbulence indicators. I look at various different indicators, and it's checked everything. And it says, based on that, this is what you should do today. Now
Mhm.
I can go, yeah, I'm going to do that, or I can go, no, I'm not doing that.
Well, and
Ultimately, I have the final say. I can turn the AI on to the fund and let it sell, and to the broker, through an API, and connect and buy and sell. But if it goes wrong, ultimately, I'm the one that's going to be. And so I don't feel it's morally right for me to do that.
I'm just thinking about funny scenario. You know, like when we're coding, your Gen AI is never wrong. It's you are absolutely right. And just imagine you use that to trade and you lost. Well, you lost 2 grand. You're absolutely
oh,
right. You find
you
Nice
were
this.
right.
catch, Chantal. Nice
You
catch.
find essential bug. Let me fix that.
Certainly, we
Imagine
can
that.
change it.
Yeah,
Yes.
just
No,
imagine that.
absolutely, absolutely. But for what I hear, guys, of course, I'm not an expert in trading, right? But I know a bit about the regulations and all. I feel that the industry, even though you can use automation for the trading, it's an industry that is highly regulated. So then at some point, the user are kind of safe, right? On the safe side.
To a certain extent, because there are ways to get around regulation in regards to if you're what's called a sophisticated investor or a professional investor, you can get around that. You can invest in a company that's
Mhm.
outside of regulate. There's different ways that you can do that. Obviously, if you go beyond to that level, you're saying to the regulator, I'm going to take responsibility for my money. But I think where
Mhm.
the real problem comes is where people use back tests, and I just feel like those are
Oh yeah.
completely wrong.
Just test on the previous data. Is that what you're saying?
Yeah,
Back
historical
test?
data.
Yeah.
And then they go, oh, my strategy worked. Look at this and this and that. And it's like, yeah, because you got hindsight. You can make anything work. And there's so many levels of bias there. You have survivorship bias. You have there's just different amounts of bias. So that's the one that comes to mind anyway. Why you pick that stock? Why didn't you pick this stock? You have
Yeah.
strategy bias. What if that strategy worked on that day? There's what's called the random walk theory. Like, you would have gotten there anyway just by a random walk. So you can say, the strategy, the time frame, the stock, it's just rife
Hmm.
for bias. And ultimately, a lot of people see, with yourself when you're training a neural network and you get your MSE or MAE, your errors as low as you possibly can, and you just retrain, retrain, and retrain. And eventually,
Mhm.
all you're doing now is you're overfitting your model. It's just memorizing the pattern. And then you go, oh, look how well it did. And look at this is my Sharp ratio. and then you go and then put it in the real world, into the real market, and it doesn't do anywhere near what the back tests showed.
No, absolutely. And this is actually a risk. You know what I'm wondering in this moment, do you think that people from Tequila could help with these kind of forecasting models and all?
They might be able to. I'd have to talk to
Yeah.
someone there and see,
And I just wanted to. Yeah, sorry. Go ahead.
No, I was about to ask you, Chen Chao, if you can show on the website of Tequila AI how to contact them in case that someone in our audience needs some of the services.
Yeah, sure. Let's do that. And before that, I just wanted, because yesterday I went into doing a bit research, and here is a link. Those are the data coming out from here. They were saying AI handles about 89% of the global trading volume at the moment.
Mm.
And this is like all different AI, not just Gen AI, right? So, and the AI trading market is
very broad.
This AI trading market right now valued at 11.5 billion 2024. It projected to reach 75.5 billion by 2034. So it's a huge.
I mean, but Joe, what about that? That's just equity markets, right? I mean, that doesn't even include crypto. I mean, crypto is
But crypto is a different world, I would say.
But they're using the AI algorithms for crypto as well. There's loads of people that are using AI for crypto.
Yeah,
I agree. But that one goes on another line. I think that they deserve a separate chapter.
What was that last bit you said?
They deserve a separate chapter. They deserve to be analyzed individually, because really, I believe that what happened with crypto, for example, in Coinbase, it was a company that started when, there was no really clue on how is it going. And then, it actually grew really well.
Mm-hmm. So this is a page. You can contact them by info@tequila.ai.com.
Perfect. So our audience know, if you need some of the services, feel free to send an email to our friends, our sponsor of the AI Amigos Show, info@tequilaai.com, and then you can mention that you went referred by AI Amigos Show, and then probably they will treat you with special treatment. Let's say that.
That's interesting. Special treatment. I don't know what that means, but let's do it.
So VIP. If they are our sponsors, they will treat you super well. Guys, we reached to the end of our episode. It was amazing talking to you as always. I wish you a lovely end of the day, and I'm really looking forward to talking to you next week. We will have -1 next week.
I won't be here next week, just FYI.
I know, but still you can join Chen Chao and me, that we will come with some very nice topic for you as every Thursday. And thank you for being here. And remember to follow us on Instagram and LinkedIn, AI Amigos Show, and subscribe to our channel.
I will be there. I will be here in spirit, just so you know, all right?
Always in our hearts, James.
There you go. Just put up a picture of me there and then talk to me. Maybe I should create an AI avatar to just talk to me.
Why not? We can give it a go.
There. Don't worry.
Thanks, Inchal.
Thank you, guys. Thanks a lot. Have a great day. Bye-bye.
Bye now.